Hey guys, I'm your host today, Dave Keller. I'm the Chief Market Strategist at StockCharts.com. Thanks so much for joining us. Always on the final bar. We're taking some time at year end to take a step back, and we wanted to provide you with this special episode where we look at the top and bottom 10 stocks for 2019. We're going to talk a little bit about your investment process, and in particular look at why it's important to, at some point during the year, ideally at the end of the quarter, end of the year, take a step back, look at what's happened over the previous period, look at what's worked, what hasn't in your process, in your portfolio, in your life. And we're going to focus particularly about an exercise that I've done for a number of years, which is looking at top and bottom performers within a benchmark and trying to understand where the returns have come from, why you were or were not in certain stocks at certain points, and think about how you can use that to improve your process going forward. So let's get to a little discussion of process here. So, when I think about your investment process, I always want to have a time when I look back and I reflect on progress. And I'll share with you a story. When I was in London years ago, I got off the tube, got off of the car, walked over to this escalator to get back up to street level. I started going up the escalator. And what was so funny is this escalator, I was riding on there for like 5 minutes, and I looked up, I'm like, oh my gosh, I've been on this escalator forever. How long is this? And I looked up, and it was literally the longest escalator I've ever seen. But what was funny about it is I looked down a little bit, checked my phone, whatever, and I looked back a little bit later. I'd made some progress. The street level, which seemed so far away, was getting a little bit closer. But what was really interesting, where I really could feel the progress I made, was when I turned around and looked back to the tube level, back to the subway level, because that's where I was really able to see the progress I was making over time. As an investor, we spend so much time looking forward, thinking about the next position, the next win, the next rally, the next sell-off, and how we're prepared for it. But what we don't like to do is look back on the escalator, see how far we've come, and in particular, review some of those experiences that may not have been as positive, right? It hurts, it's painful to relive some of our past failures and try to learn from them. But arguably, as an investor, it's one of the best things that you can do. Before we get to the particular exercise we're going to talk about today, I also want to remind you to treat your charts, especially on StockCharts.com, treat them as a notebook, not as a painting. I've seen people that love these, they're pristine, clean, unadulterated charts that have no annotations, no lines, no craziness. It's just a pure, beautiful, simple price series and indicators and things like that. And that's fine if you're trying to create something that you want to print out and hang on the wall of your office, for example. But in terms of actually making your charts usable, what you want to do is make sure that you use the notation tools to capture your thinking at certain periods of time. So this is an example with a healthcare stock, AbbVie, and the notes that I actually put in my own chart a couple years ago as a way of tracking my thinking over time. And I did it so that as the price evolved, I would be able to look back and see not just a line that I drew or not just a key support or resistance level. I was actually capturing my thinking so I could see over time how that evolved. If I missed something, which I often do, these notes are the way that I can actually understand those misses. So what's really helpful is the stuff you do before we get to this annual review process of your own investment strategies, because these notes are what you're going to be able to look back on as you look at the charts. And so, I would encourage you going forward, maybe in 2020, to think a lot about the way that you're using the charting platform. Make sure that you use notes as much as possible. It's a great way to capture your thinking. Now, in particular, we're going to talk about an exercise called the post-mortem analysis, and that's essentially, if you've worked with any technology experts, technology professionals, they love to do a post-mortem exercise at the end of a major project, and that's Latin for after death. And so essentially, you do a big project, and then at the end, the final meeting you have about it is a post-mortem where you review how the project went, you talk about what worked, talk about what didn't. Hopefully, you set the team up for more success in future projects, and it's a great way of sort of assessing where you're at and where you can make improvements. When I used to manage professional analysts, we would do what I love to call the worst call meeting, and a couple times a year, we would all get in a room. You had to bring a printout of your worst call. So it was essentially, what was your worst call in the last 6 months? And what was funny about it is it was one of my favorite meetings because it caused everyone to, number one, embrace their imperfections, to address the fact that they were not perfect, that they often would make bad calls, and you had to admit that. Number two, you had to admit it to other people. So, having an experience but then kind of keeping it to yourself is one thing. Actually having to explain or justify your thinking to others is what's really, really helpful. With my own firm, when I've worked with financial advisors, I've often thought of my role as more of a personal trainer for them, because basically having to admit what they're actually doing, how they're making decisions, when you have to admit that to another human being, that's when you immediately recognize some of the shortcomings of that process. Sort of like when your trainer asks you what your nutrition is like, and you have to admit to eating that piece of pie or that second helping or something like that. So the worst call meeting was really formative, I think, for me and my team, because it caused us to really review our own process, review some of our poorer decisions or decisions that did not work out very well, and try to upgrade it. So what do we do with this sort of exercise? So this was born with some of my work with institutional investors, and with some regularity with a number of them, we would go back, look at a time of a period. So in this case, we're going to look at calendar year 2019, which is almost over. We're recording this sort of in late December between Christmas and New Year's. So a couple days left, barring any major changes. What we're talking about here is certainly going to hold true. Some of the member stocks we talk about might change a little bit. But the point of this exercise is to actually go through, number one, what worked this year, right? So what stocks actually did very well. Out of my universe, and we're just using the S&P 500 for simplicity right now, out of my universe of investable choices, what worked this year? Out of all the things, all the triggers I could have pulled, all the levers I could have pulled, which stocks worked the best? And was I there? Did I own them? And why or why not, right? So did I own the stocks that would have helped my performance the most? If so, why did I own them? If not, why not? Question number two, what did not work this year? What were the bottom performers in my benchmark? Out of all the stocks I could have bought, which ones went down the most? Which ones underperformed? And did I own any of those? And if so, why? What caused me to hold them, especially during a period of significant underperformance? Number three, how can I take my answers to these first two questions and upgrade my process for the next period? So when I'm having this conversation at the end of 2020, what can I do between now and then to make my process better? So what worked, and how can I do more of that? What did not work? What can I do less of? And overall, over a series of years, over a subsequent periods, hopefully you can improve that. So if what I just talked about doesn't make a ton of sense, I recorded a video a while back on my YouTube channel called Market Misbehavior, called the post-mortem analysis, where I actually talk through the value of doing this sort of work and just sort of talk through some of the steps that I would take. So if this is unfamiliar, check that video out. It might help fill in some of the blanks. So let us together now do a post-mortem analysis of the S&P 500, of sort of a standard benchmark. And again, I would encourage you, make this exercise your own by using your universe. If you invest in ETFs, do this analysis using a bucket of ETFs you might invest in. If you're looking at international stocks, same with that, and so on. So let's look at actually what happened. So again, as of the last week, trading week of 2019, what has worked? Number one, AMD up almost 150%. That's not on a relative basis, that's on absolute returns, including dividends, so it's a total return calculation. We have LRCX, KLAC, all up about 100% or more. So pretty significant gain at a time when the S&P 500 was up. No weak performance from the S&P as a whole. Pretty decent performance, but there were stocks that were up a lot more than the benchmark. These are all up 87% plus. Then we have Target, Chipotle, QRVO, CPRT, XRX, Xerox, Applied Materials. You see the tickers that are on here. The bottom 10 stocks for the year, again, as of the last week in December, the worst performing stock, ABMD, down 48%, Macy's down 45%, Occidental, Gap, and you can see the rest of the tickers down here finishing with Mosaic. All of these stocks were down at least 26% on a total return basis. Again, not relative, these are absolute returns, including the contribution of dividends. So the S&P was up, 20-30% or so, depending on how on the year finishes out. Obviously, a lot of strength going into the last couple weeks, so it's a bit of a question mark. But overall, these stocks were up big and down big in absolute returns, and again, regardless of what the overall benchmark was. So a number of just brief takeaways from this point of the post-mortem analysis. So what you're going to find when you do this every year is, regardless of what the broad market has done, if the S&P 500 is up 40% or down 30% during the year, you will find stocks that are up a bunch, and you will find stocks that have been down a bunch during that period. For me, it takes me back to talking with Peter Lynch, or looking at William O'Neill's methodology with Investors Business Daily. Peter Lynch talking about stock picking, and forget about the macro picture. Just look at stocks, just look at stories, look at themes, and regardless of what's happening in the overall market, you're going to do well if you're in the right stocks, and there's value to that. William O'Neill, obviously much more of a market orientation, because CanSlim, the M in CanSlim is market, and whether it's in an uptrend or downtrend. But if you flip through Investors Business Daily every week, you will always find charts that look pretty good. Regardless of what the overall market is doing, there are always good charts out there. And so the first takeaway is that it is always a stock picker's market, in that there are stocks always up. There are stocks that are going to be down in any time frame, and I've done this for years, and it's always pretty much been the case. The second thing we can think about is just some of the sector and industry themes. In our next look, we're going to go to the StockCharts website and start to look at some of those thematic pictures. The third thing we're going to do is actually look at the charts individually. We're going to look at all 20 of these charts together, and again, start to make some assessments about our process, whether or not we were in these stocks, whether or not we were in the bottom stocks, and what that means for us. So let's go to list number one. So this is the S&P top 10 stocks. This is the same list I just showed you on the previous slide, but I've put them into a chart list on StockCharts.com. I put them in order from the top to number 10. So I would ask you to look at these center columns, where we're looking at sector and we're looking at industry. So what immediately jumps off the page of me is over half of these are technology stocks, and almost half of them, actually literally half, 5 of them, are semiconductors, right? So 6 of them are technology names. You have 2 in computer services. 7 in technology, 2 in computer services. The other 5 are all semiconductors. So 7 out of the 10 are in tech. 5 out of the 10 top stocks were all semiconductors. We've talked on the final bar often about the scooter rankings, right? The StockCharts technical rating. And you often, we've seen the top 10 stocks are often a lot of semiconductor names in the last couple months, as semiconductors as a group have done so well. And this tells you that it echoes what we've seen with the scooter rankings. You can see the scooter rankings here, and you can see how many of these are in the top decile, if not top 5%, right? If it's 95 or higher, that puts them in the top 5% of the large cap universe, not just S&P, but sort of a large cap broad universe. So that's number one. The second sector represented here is consumer discretionary. So we have Target and we have Chipotle, both at the top 10 for the year. And then the only other sector that's represented is CPRT, which is in a transportation services stock. So those are the top 10 names. Those are the characteristics, very tech heavy, which makes sense. We've seen sector returns with tech being leadership, with the NASDAQ holding up very, very well, performing very nicely. This certainly reflects that, but also some consumer discretionary names. Consumer discretionary as a sector, not necessarily as strong, but you can see some of the individual opportunities within them very, very good. And then an industrial name, which is again sort of that late cyclical offensive group. Let's look at the bottom 10 and how we summarize those 10 stocks, and then we're going to go back and look at each one of these charts one by one. So in the bottom 10, we have ABMD, which is a healthcare stock. We have one other healthcare name, Mylan Pharmaceuticals, which is obviously a pharma name. Other than that, there's a lot of more differentiation in terms of sectors, right? You have energy, like Occidental Petroleum. You have technology, DXC is in here. It's a computer services name. We have some staple stocks like Kraft Heinz, a financials name, a materials name, Mosaic. So there are many more sectors that are represented here. I don't know if that necessarily is true year to year. I think that's just sort of the way that things have played out. I would guess in general, this is kind of how things would lay out. This sounds familiar to me only because you will often have a theme like semiconductors that work. A lot of people get in the group. That'll push a lot of the stocks up. A lot of the names down here are going to be earnings misses or some big structural change that'll push the stock down significantly, and that can happen across sectors. That's rarely an entire group that would surface at the very, very bottom of the list. But we have to see that over time and see how these things sort of play out. Now here on the scooter rankings, you can see how low a lot of these ones. The strongest stock is 26. This is Kraft Heinz, which has improved a little bit from from looking fairly weak. But some of these single-digit scooter rankings, which means they are way at the bottom decile of all the potential stocks out there. So let's look at these groups individually, and we're going to look at the individual charts. So I'm going to go to this and say 10 per page. That's how I like to look at some of these things. So we're now looking at a 7-year weekly chart. This is a pretty long-term view because we're looking at 1 year of performance. And I often find if you want to look at one certain time period, if I'm trying to look at 1 year, you want to go back 5, 6, 7 times that amount just to get enough data. So if you're looking at the last 1 month of trading, you're trying to play a stock for 1 month out, you want to look at like a 12-month chart, a 1 year chart, because that's going to give you enough data to really make a good assessment about how the most recent month fits into the longer time period. So here we're looking at 1 year, so I'm going back 7 years to understand how the most recent year fits into the longer term trend, sort of that longer primary trend. So what we can immediately see looking at the chart of AMD, which is the #1 performer, #1 up pretty good today here, as after a run of many up days in the last couple months. This is or up weeks, which are looking at the chart here. This thing's bounced off the 40-week or the 200-day moving average. It just has continued to go lights out to the upside. But look at the relative returns versus the S&P 500 over the last 7 years, and most of that, if not all of that, has come in the last couple years. You can see the relative performance really has accelerated up. In 2016, when the stock rallied very well, sort of sideways for a year and a half, and then the relative uptrend really persisted through 2018 to 2019, up almost 700% on a relative basis, going back for the last 4 or 5 years for sure. So the question is, what happened with AMD? Where might it have popped up on your radar, and what can you do about it? So a couple things that I would say. #1, I'm noticing here, and again, this is just on the weekly chart. It would be great if we had time to go through the daily charts as well and really think about some of the shorter term implications. But just looking at the weekly charts, and I'll tell you, I have not looked at these weekly charts yet. I intentionally waited until this recording to really dig into them. So I'm doing this all by sight as I'm looking at these individual charts. I'm noticing in the middle of 2018, going into the fall months, that AMD was extremely overbought. And we've talked a number of times on our show, The Final Bar, how when a stock becomes extremely overbought, you'd expect a bit of a pullback, but then you'd expect a resumption of the uptrend. So the fact that it had become so extended that it pushed it to the extreme overbought region, I think was really telling. When it pulled back to the 200-day moving average, you can see the uptrend persisted. The RSI never got below 40, which is sort of a classic sign of a bull market phase, when the RSI never gets anywhere near the oversold region, remains about 40 or higher. And you can see just now with the run that we've had in semiconductor names, we might see this on some of the other charts as well. You can see that the RSI is almost 80, so pretty overextended, right? I'm sorry, yeah, so overbought and nearing that extreme overbought region. So what I should have seen here, #1, the extreme overbought condition, but then the pullback in the RSI never got below 40. That's an interesting data point to me, and the fact that it found support around the 200-day moving average. Even though the daily chart might sort of back some of that up. And then just this base, sort of a cup and handle pattern of a resistance level, a then shorter rounding pullback, and then a break to new highs. That, of anything, should have told me that this was a really compelling chart. We can see the last couple of months have been fairly positive. The second stock, LRCX, was up significantly, 100% plus in 2019. This is another semiconductor name. We see a little bit of a different characteristic here. It never really became extremely overbought in 2018. The RSI did get much lower, so this actually got down to almost oversold conditions and found support at the 150-week, which is a much longer term barometer. But what stands out to me is this improvement in relative strength. So you had a period of underperformance in 2018. That reversed, and all of a sudden you're making new 3-month relative highs, 6-month relative highs, annual 12-month relative highs. That continuation of the relative outperformance is what hopefully would stand out to me. What's interesting to me now with some of the semiconductor names, along with a lot of other stocks and technologies, this potential bearish divergence or non-confirmation that we see with LRCX. KLAC is another semiconductor name. We can see the breakout in relative performance, the break to new relative highs. It would have been a relative performer, sort of a market performer for about 2 years, and then the nice breakout to new relative highs. Extremely overbought, which is why we'd expect a bit of a pullback and a resumption of the uptrend, which is where we're at right now. This is why it's interesting leading into the new year, whether or not this finds resistance right about at the overbought level, which might tell us we have a bit of a pullback. But for me, overall, it's the break to new highs, the break to new relative highs that should put a stock like KLAC on our radar. Target is a very interesting one. The daily chart looks pretty extended because it's been on such a nice run. You can see on a weekly basis, the relative strength really improved in the last 6 months. But on the weekly chart is where this basing pattern really comes out. And I think what stands out to me visually is the fact that you had this base, right? This resistance level we hit in 2015, these numbers of false attempts to break higher, and then finally the follow through in the second half of that year. And that acceleration through the resistance is what stands out to me. The break to new 12-month, if not 2-year relative highs, the RSI increasing, never really getting below 40 during that pullback, I think are interesting signals to look at. Chipotle is number 5. This is a stock that had been an absolute disaster in 2016, 2017. This is coming out of all the meat issues, all the challenges with the restaurants. Talk about a reversal, and I think the transition from distribution to accumulation, the RSI being all up in that bullish range, never getting below 40, remaining overbought, if not extremely overbought, pretty interesting. Again, a potential bearish divergence here, if not a confirmed bearish divergence. Lower peaks in RSI with a higher peak in price is something that may be a little bit concerning here. At this point, it's all about whether or not it gets to a new high, having just broken above the peak from 2015. We're going to go continue quickly through the rest of these top stocks, and then we're going to look at some of the bottom performers. QRVO, another semiconductor name, comes to mind as a beautiful long-term base. It's a 4 to 5 year base that we've broken above, now breaking above resistance, now extremely overbought, relative new highs for the last couple of years. That's a very, very strong chart with no real signs there of that being alleviated. We now get finally to a different sector. This is an industrial name called Copart. It's part of transportation services. Look at the nice, slow and steady performance in the relative strength. That's one thing that comes to mind looking at this chart, and how often that the stock has become overbought and has just sort of shrugged that right off, and it's continued higher. The RSI has really never been much below 40 since back here in 2014. Overall, it's been a very strong stock, remains in an uptrend. So this is a good reminder for me that stocks can become overbought and remain overbought during extended bull phases. We often love to sell too soon when something becomes overbought. That's a reminder to hesitate a little bit, tap the brakes when you're thinking of doing that. Xerox is actually a surprising one to me that is on this list. I was surprised when I saw the results and look at the tickers. What's interesting is that you can see the rotation from this big basing pattern, right, for the last 4 to 5 years, and you can see how we've now transitioned above there. It's certainly broken out a big base breakout. What's interesting, though, the relative performance not nearly as impressive, but by starting at the end of last year, that's when it really bottomed out. It really sold off into the end of last year, and that's why it sort of right-sized, came back to its normal trend, sort of came back to the mean, reverted to the normal trend, which overall has been okay. But you can see how much less attractive this stock is visually relative to some of the semiconductor names, which looked like a chart that would be at the top of here. So you have to remember, a lot of times your starting point, where you start the clock, can affect the results dramatically. If we started back here on October 1st, this wouldn't be anywhere near one of the top performers, would be my guess. We'd have to look at the data. LDUS, Leidos Holdings, is in technology as well, but a different group. It's in computer services. This strikes me as a stock that's been in a slow and steady uptrend, rallied very nicely out of the lows in 2019, broke to new highs. The relative strength has been solid. So as the market corrected, especially here in August, you can see this was essentially immune to it, held up pretty well, and the relative strength remains positive. So it's a good reminder to me to pay attention to relative strength. And the last one, Applied Materials, is another very good chart to remind you of that. Out of all the semiconductor names we looked at, AMAT seems to me one of the ones that looks a little earlier on in the breakouts. So a lot of semiconductor names, KLAC, for example, much further in the uptrend. This is actually just still testing resistance. Hasn't really gone up. But look at the difference in relative strength in 2018 to 2019. So again, along with some of the other semiconductor names, the lower RSI as the price is attempting to push higher is what I'm looking at with AMAT in particular, one of the larger semiconductor names. I'm looking at this resistance level. This could end up being a fantastic double topping pattern years from now when we look back, but it's all about whether we can push above this level, whether the RSI can get back in that overbought region, suggesting further upside. So that is a look at the 10 stocks, and again, just my initial takeaways looking at my charts. Again, I would encourage you to look at your own charts of these names and see how you would have analyzed them. Were you there? And again, I can't answer questions about whether I own them, because I didn't. Whether I bought or sold them, I didn't. I stayed away from these sort of names. I tend to not trade individual names with how much I'm talking about them with people like you. But I would encourage you in your own portfolio, with your clients' portfolios, think about your own trading, how it fits into obviously each of these patterns that we're looking at. Let's go quickly through the bottom 10, and then we'll wrap up this special segment on top and bottom stocks for 2019. ABMD is a medical equipment name. What strikes me about 2019 for this stock, this is the worst performing S&P name as of the last week in December. Look at how the price and relative strength have just been in a downtrend. It started the middle of last year. It started in 2018, so this should not have been a surprise that the price was going lower, because the trend had already gone lower. This is breaking down through the 200-day, retesting it from below. Now we're going in a downtrend. We're below a downward sloping 200-day moving average at a time when the market was rallying so well out of the Christmas Eve low last year. Look at how this just never recovered. So anytime we've looked at charts together on the final bar and I see the relative strength just sloping downwards, my initial thought is always, why would I ever want to own a stock like this? I want to wait until there's some indication that institutions are going to rotate to this name. And again, this is a great example as to why you want to avoid stocks that are underperforming. They're underperforming for a reason. You don't even need to know the reason, but understand that that's what the chart is telling you. Macy's is the second one. This is one that, some of these swings, especially 2007 to 2018, this is going from an adjusted basis from, 15 up to 37.50, so more than a double over about, 8 or 9 months. So these are huge percent swings that we're seeing down here. Macy's feels like it's been in a bottoming pattern for quite a while, but again, the problem is on a relative basis. You can see how that downtrend has just been going lower and lower. It's never really recovered on a relative basis. The RSI has never been above 50 for the entire year. That's not the type of chart I want to own during a primary uptrend, which is what the S&P's been doing. There are some interesting pockets within energy, but boy, OXY, Occidental Petroleum, certainly doesn't seem to be one of them. This is one, a lot of energy names are sort of up here, are sort of testing resistance. They're rallying, they're trying to break above moving averages. Occidental is not that. And again, I'm looking on a weekly basis here, but you can see how beaten down the stock has been. Again, the RSI never getting above 50, the relative strength so consistently negative. Gap is the next one. This is in consumer discretionary, and it's interesting. Consumer discretionary is one of the few that has stocks on both the top and bottom performer list. That does not surprise me. That's usually the case because it's such a diverse sector. There's so many different types of companies, types of businesses that are represented there. Here we actually see a stock that's potentially bottoming out at support. This is testing the lows from 2015. So if I was a bottom fisher, again, not looking at the daily chart, if I did, I might be tempted to think about how this would be a potential long candidate, again, as a bottom fishing candidate, not as a trend follower, because it's just not quite there. But we have to see if we break out of this sort of congestion area, this area we've been in for the last 6 months. But stocks that sell off and never really meaningfully recover, you have to hold off on. DXC is another technology stock. What's interesting to me here is the stepwise motion. Lower highs and lower lows are a downtrend. You see that in the price. You see that in the relative strength. And again, at a time when so many stocks are strong, that type of chart, I think you have to avoid until you get a higher low in relative strength, which you've not had yet. Limited Brands, very, very similar. Downtrend in price for the last 5 years. So until you see some sign of accumulation, you have to hold on. MYL, Mylan is the next one. In the pharmaceutical space. Kraft Heinz is an interesting one because this is a big percent swing, and on the daily chart looks pretty compelling because it's testing resistance around 32.50. But boy, I would want to see if that's able to return on a weekly basis. Still relatively looks pretty weak. We then finish off the bottom 10 for the year with ADS. And then finally with Mosaic, and Mosaic is the only material stock we get on the top or bottom 10. And again, my only takeaway here is that we've broken down through support. And until we get some sort of higher lows showing that there's accumulation coming in, you still have to think of this as a stock that's sort of at the downside, the lower part of the return list. Folks, that is our special show for the end of the year, the top and bottom 10 stocks for 2019. Thanks so much for doing this review with us. I would encourage you to take what we talked about here, look at your own universe, your own portfolio, do some thinking about how you can improve your process by reviewing what caused you to be in the right stocks, what did not cause you to be in some of the stocks that could have helped you returns, and where you might be able to upgrade your process in 2020 and beyond. Have a wonderful holiday season, and we'll see you next year on the Final Bar. Thank you.